Hello everyone, welcome back to All Financial Discussion channel. For this video, I'd like to continue the discussion on SRS. This video, I'm going to share the different types of SRS investment. I know that when you actually put money into SRS, the key objective is to save tax. But let's say if you do nothing onto the money inside the SRS, okay, you will be earning just 0.05% of the interest, and this can't even beat the inflation. So therefore, the key idea of this video is to share with you the possible different types of SRS investment. So basically, this will be the objective of this video. On my next video, I will share exactly how I actually invest, okay, in my SRS money. So basically, all this will be the objective of the series of discussion on SRS. Before I continue, I'd like to urge you guys to help me by like this video. Just give me a few seconds. Press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe to this channel and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer, this is actually not a financial advice. Please conduct your own independent research and consult a professional if you are not clear. Never invest more than you are willing to lose. With this, let's kickstart today's discussion. Let's firstly come to my reflection on SRS. When I firstly opened my SRS account, my key objective was tax relief. Every dollar that we actually contribute, this actually lower our taxable income, and therefore this saving on tax saving actually will be very attractive. So with this, I actually deposit maximum amount of money into my SRS account every year. However, I didn't really take this to the next steps of investing those funds. They remain in cash, earning the default interest rate of 0.05% per annum. Okay, so like I mentioned earlier on, the key objective of SRS is to save on tax. Over here, you can see that Jim and Amy actually save the tax. Okay, with maximum contribution, the potential of Jim save in terms of tax will be almost 20K for 20 years of contribution into SRS. As for Amy, you can see that her saving in terms of tax can be as high as 46,000 after 20 years of contribution to SRS with maximum contribution. As I beginning thinking more seriously about retirement, building multiple stream of passive income, and in fact, I actually start this YouTube channel, I realized that leaving my SRS saving idle was not going to help me. With inflation outpace the SRS interest rate, my money real value was quietly diminished over time. To make better use of my SRS saving, I start to explore different investment options, including those that could generate income or capture long-term growth. Let's take a look on this graph here. So let's say that you so-called contribute 10,000 into your SRS fund without doing anything. Okay, after 40 years, 0.05%, you will earn 10,202. Okay, so this is actually very miserable. And as I mentioned earlier on, you can't even beat the inflation with this amount. But let's say if you do something to your SRS fund, you can see that the return can be very attractive. This is because of compounding interest. Let me now focus on the 8 types of SRS investment, how I actually list them. Okay, so the number 1 will be the most safe, as for the number 8 will be the most risky one. Okay, so the most safe for me will be the Singapore T-bill and also Singapore government security. The key difference between these two is T-bill is mainly shorter, while this SGS mainly will be longer so-called commitment. Okay, so all these two will be backed by Singapore government. So in fact, they will have a very low default risk and minimum price volatility, especially if you kill them to mature. Next will be the Singapore saving bonds. Okay, so again, this will be backed by Singapore government. Okay, so the key difference is with this SSB, you are going to have a flexible redemption with annual step-up interest, which means that every year the interest will be increased. Okay, so this will be slightly more price sensitive than T-bill if you decide to redeem earlier. Next will be the money market funds or bonds fund. Okay, so this consider still very conservative. They still focus on short-term debts, the lower volatility than equity, but not really risk-free because of the interest rate and credit risk. Singapore dollar or foreigner currency fixed deposit. Okay, so why they are at number 4 is because of this foreigner currency fixed deposit. This Singapore dollar as a fixed deposit, which means that it's like usual you put your money inside your bank as a fixed D. Okay, so basically these are still considered very safe. There will be more risky when you actually put into the foreigner currency for the fixed D. Next on the item 5 will be the endowment plan. Okay, so this is like our insurance saving product with medium risk. Okay, so the returns somehow they are actually predictable, but often they are actually lower than market instruments. The risk actually depend on the structure and how you want your investment to be so-called done properly. Next will be on your SGX-listed ETF. Okay, so this in fact will be the more popular SRS investment now. Okay, so basically they actually diversified the basket of stock or bond like S&P 500. Okay, so the risk level actually depend on the underlying asset class, but in general, there are also less volatility as compared to the individual stock. Next will be at the number 7 will be the equity funds tracking the US. Okay, so basically this is like I mentioned earlier on, S&P 500. They basically track the top 500 company in US and also the global equity index. Okay, so basically the bond market equity exposure. Okay, so basically you want to so-called expose your investment onto US stock like S&P 500. They typically has a higher okay, so-called long-term return. Okay, but more short-term volatility than fixed income or conservative fund. Last but not least, Singapore stock, individual Singapore stock and also REITs. Individual equities and REITs, they can be very volatile and they are also very sensitive to market or sector condition. They in fact will be the highest risk in this list due to the company specific and also the market risk. Before I continue, guys, this is very important to me. I like to urge you guys to help me by like this video. Just give me a few seconds. Press the like button now. If you later on found this video to be useful, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. Singapore T-bills and Singapore government security. Okay, the key difference will be the time frame. Okay, so Singapore government security are debts instruments that is actually issued and fully backed by the Singapore government. Okay, with the T-bill, treasury bill being a shorter term subset of SGS. T-bill have a maturities of 6 or 12 months, and typically they are sold at a discount, allow investor to earn the difference between the purchase price and the face value at matured, making them a very safe, low-risk way to park cash. Okay, on the other hand, longer-term SGS bond have maturity range from 2 to 30 years, and they actually pay semi-annual coupon, which means that every 6 months they will pay you an interest. They typically offer higher yield in exchange for longer commitment. When you actually invest in these instruments, you are effectively lending money to the Singapore government, and the yield that you earn depends on the bond's maturity. At recent auction, the 6-month T-bill actually offer a yield of 1.41% in December 2025, while the 1-year T-bill offer a yield of 1.35 in October 2025. Singapore Saving Bonds, which is also known as SSB. Okay, so this is also considered a low risk because it is actually issued by the Singapore government, okay, with the MMS actually acting as an issuing agent. Okay, so this is actually designed for individual investor. Okay, so they actually provide a very simple, low-cost way to generate safe returns while preserve the capital. Okay, unlike Singapore government security (SGS), okay, SSB in fact provide greater flexibility. Okay, they actually allow investor to redeem their bonds any months before maturity without any penalty. However, okay, I need to say this. This is actually subject to a very small redemption fee. Okay, while you actually will be receiving both the principal and also the accrued interest. Okay, so the SSB have a 10-year maturity and they actually feature a step-up interest structure, which means that the longer you hold the bond, the higher the average interest rate that you actually earn. Interest is paid every 6 months. For example, the January issue of SSB offer a 1-year return of 1.33% and an average 10 years of 1.99%. As you can see that the interest actually stepped up. The investment minimum is actually $500. And in short, there are actually multiples of 500, which means that you can invest either 500, 1,000, 1,005, etc. And the maximum holding per individual will be 200K. Overall, SSB, Singapore Saving Bond, they actually provide a very flexible, secure, and gradually rewarding investment option for long-term saver. Next, I like to focus on the money market funds, okay, which is mainly for short-term investment, and also the bonds funds. Let's come to the money market fund first. So, for example, if you are looking for a lower risk option to park your SRS fund first while waiting for the investment opportunity, then you probably can consider this money market fund. So basically, in short, you can see from here, the money market actually will have a higher interest rate as compared to the saving account. So therefore, this is in fact will be a better choice if you're waiting for the next opportunity. So this, as I mentioned, that there are a specific type of unit trust that invest in short-term, low volatility instruments such as bank deposit and high quality corporate bills. They aim to provide return with minimum volatility by focus on stability and liquidity, which means that you can easily cash out when you actually want. Next will be on the bonds fund. Okay, so this in fact will have a potential higher return. Okay, so therefore you actually want to consider this bond fund. Okay, so these are a type of unit trust in which a professional fund manager actually invests your money in a diversified portfolio of bonds. Okay, so basically this will be managed by a professional fund manager. Each bond fund has its own specific investment mandate. For example, some funds actually invest primarily in high quality investment grade bonds, while others focus on higher yield, for example, the Asia corporate bonds. Okay, so this allows you to choose a fund that actually allow to align with your risk tolerance and also your income goals. Singapore dollar or foreigner currency fixed deposit. The main reason why they are actually at number 4 is because of this foreigner currency fixed deposit. Because Singapore dollar as fixed deposit, we know that they are actually very safe. Okay, so one of the easiest way to grow your money is by placing them into fixed D. Okay, so this is usually done with the same bank where you open your SRS account. For example, let's say in fact, actually, SRS account is with DBS. So therefore, you can put the fund into a DBS fixed deposit. As for December 2025, most majority banks in Singapore actually offer a 12-month fixed D rate of 1 to 1.4%. As for foreigner currency fixed deposit, this is more risky. Okay, so more risky means that you potentially has high gain or potential will have more risk. Okay, so you may consider this fixed deposit denominated in foreigner currency, okay, such as US dollar. However, you need to note this, okay, because the foreigner currency fixed D are subject to exchange rate fluctuation. For instance, okay, so if the US dollar actually weaken against the Singapore dollar, you could incur loss on your investment. As for now, December 2025, the highest 6-month US dollar fixed deposit rate that we actually identified was 3.9% per annum, which is offered by RHB with a minimum deposit requirement of US dollar 50K. Okay, so basically this is for Singapore dollar or foreign currency fixed deposit. Next, I like to focus on endowment plans. Okay, so an endowment plans, in fact, will be a type of insurance-linked saving plans that typically has a single premium product. For example, you actually, in fact, will be paying the full amount upfront with your SRS fund. What they actually cover, they will combine saving with life insurance cover. Okay, but the cover will be only on death or total permanent disability protection over a fixed policy term. They typically guarantee some form of return at maturity, okay, but may also pay bonus or cash payout depending on which plan that you actually sign for this endowment plan. Okay, so in short, endowment plan is actually associated with the insurance that we are all very familiar. Using SRS to invest into SGX-listed ETF is getting more and more popular according to SGX. Okay, so basically you can see from here, okay, according to SGX, the combined asset size of this SGX-listed ETF directly held by SRS investor has grown by 380% from 2019 to 2025. Okay, why? Okay, because ETF basically they provide instant diversification as they typically hold a basket of security, represent a particular index sector or asset class. In addition, ETF they are generally more cost effective as compared to actively managed unit trusts. There are many types of ETF listed on the Singapore so-called exchange, such as the REITs ETF, STI ETF, gold ETF, and also bond ETF, and many more. Okay, so over here you can see that these are the top 10 ETF that is actually held by SRS Investor. Okay, so as of October 2025, over here, okay, you can even see that US S&P 500, okay, is also a very attractive ETF that is actually invested by SRS. Okay, so over here, you can also see that the newly added ETF over the last 12 months. Okay, so basically these are all the so-called possible ETF that you can consider to invest using your SRS. Next, let's come to equity fund tracking US and global equity index. Okay, so in fact, many investors ask whether it is possible to use their SRS fund to invest in major US company or the broader global market. While SRS fund you cannot actually use to buy a very specific US listed stock, for example, Apple or Tesla directly. But investor can still gain exposure through the ETF listed on the Singapore exchange, which I have shown it to you earlier on, or mutual fund that is actually available on digital wealth platform. For ETF, for example, this SPDR, S&P 500 ETF, okay, so basically the code is SGX-S27. It's actually listed on the SGX and they in fact track the performance of the top 500 company in US. Okay, so this ETF can be purchased like a regular stock through any brokerage that actually support this SRS investing. For those that actually want to seek a broader diversification beyond the US, okay, the Dimension Global Core Equity Fund can actually provide some form of exposure to developed market worldwide, including Europe and also Japan. Some digital wealth platform also offer a pre-built portfolio that build diversified exposure to global funds. Last but not least, on Singapore stock and also REITs. For example, if you are investment savvy and if you prefer to have a hands-on approach, you in fact can pick your own stock and also the REITs that is actually listed on the Singapore exchange. You can easily start by invest in blue chip stock in Singapore. Okay, so over here you can see that there are actually 9 possible stocks that you can actually pick. Okay, so these are the more popular Singapore stock that is actually invested by SRS investor. Okay, so in short, the best SRS investment option actually depends on 3 things. First, how long you have until retirement. Second, how much volatility you can actually tolerate, and last but not least, whether your priority is capital preservation or long-term growth. Rather than trying to pick a single best product, it actually helps to understand how each option actually fit into your overall retirement plan. Okay, so basically these are the quick summarize what we have discussed earlier on. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.